G'day everyone, welcome to this update of global markets, Australia and America in particular, for the 1st of March. And the rally continues strongly in around the world, particularly in Europe, which I don't quite understand, but I think that's just all about the fact that they've got negative interest rates there. So let's have a look at what happened last week. The American index, the S&P 500, blasted through 2,100 points. It was very impressive. It had only paused very briefly around that level and then went through it pretty emphatically. We've had a retest of that 2,100 breakout in the last couple of days, but the way the market has moved through that level suggests to me very strongly that we're going to continue to move higher in America. So I believe there's a very good chance we're going to go towards 2,200, and I think we could get there fairly quickly. The market is just showing amazing resilience, and any dip at all is going to be bought, that's for sure. Now, there's just one proviso. Some of the economic data is coming through just a little bit weaker than what we have been seeing over the last year or so, and there is a very important Institute of Supply Managers report coming out on Monday night. That needs to be a little bit better than what we've seen in recent days. Otherwise, the market might take a bit of a backtrack. But let's see how that goes. But nevertheless, the US market looking very strong. The Australian market, the ASX 200 index, again up by 46 points on the week. The story is unchanged in Australia. The value is just appalling. And the risks of owning these high-yielding stocks, the banks and Telstra and other high-yielding stocks, is really, to me, it's just not worth the dividend that you get for the capital risk that's now on the table. These stocks trading at just silly levels. But what's happening here is that overseas money is driving the big dividend stocks. And if you're a European fund manager and you're looking at effectively zero to negative return by investing in European bonds, then getting 5% in Australian high yielding stocks is attractive, and you don't care too much about value, and you don't worry too much about the downside, although I think you should. So let's have a look at those indices to start with. We'll start with the S&P 500 on a monthly chart. So this is the big picture, and you can see that trend remains very, very powerful on a big picture level. This is the dip here in 2011, and since then it's been an enormously strong trend, and I'm not really seeing anything change there at all. You can see the week that we've just had went down just a couple of points, but look, this has been a pretty strong move, and I don't see any reason why it's not going to continue. If we look at the NASDAQ, the NASDAQ has gone above, we wind all the way back to 2000 when we had the massive collapse in the technology market. You can see we had a peak in the NASDAQ just under 5,000 points. The market fell away very sharply and then rallied back to a secondary high, which is typical market behavior. So we've gone above that secondary high, and you can see we rallied up to it, we got rejected, we broke through it, we came back, retested it. This is all textbook pattern formation, and now we're starting to move higher again. The next resistance is going to be just under the 5,000 mark, and it'll be very interesting to see how the NASDAQ behaves around that level. Just looking at the Australian index, this is the ASX 200. If we pan back now, we're starting to make a bit of positive ground compared to where we were. We've got to go back. We're at roughly the same level. We're at a peak in May of 2008. So this is before the GFC really bit. So we've got back to that level now. This should form some sort of resistance level, I would expect, around this level. So I wouldn't be at all surprised to see the Australian index backtrack a bit. There are so many stocks that are overvalued that could be well and truly justified. Moving on to commodities, gold was up by $12 on the week, back to $1,213. It's just hanging on by its fingernails to that 1,200 support level. The fundamental supply and demand situation for gold still strongly supports higher prices, but this price action in gold is now starting to look much more like just a rally in an ongoing bear market than it is the start of a new bull market. I have to be upfront about that. As much as I would love this to be a new bull market, and the fundamentals are absolutely screaming that it should be a new bull market, the price action is just not supporting that. So I think at this stage we've got to go back to the camp with gold that this is just a rally in a bear market. However, gold stocks continue to outperform, and we'll have a look at the HUI index, and it's still okay for a new bull market, but certainly gold is not behaving like a new bull market. So an interesting dilemma there. Now, the US dollar strength is certainly not helping commodities. I think certainly gold would be higher if the US dollar wasn't so strong. Copper, we'll have a look at the gold chart in just a minute. Copper rose to $2.69, so we might be just getting a bit of a basing pattern occurring in copper, and that would be a bit of a positive. That was starting to become a bit of a concern. Crude oil slipped back again, back to $49, and this is one where the fundamentals do absolutely support the fact that this is just a bounce in a bear market, and the price action also strongly indicates that. I think we're going back down into the mid to low 40s on oil, and I wouldn't be surprised to see a break of $40 temporarily. If that played out over the next 3 to 6 months and then oil turned around, certainly the fundamentals at that stage could support a rebound back into the 60s. But I think you can forget oil being back at $100 anytime soon. And there's the spot copper chart. So let's have a look at a couple of these commodity price charts. This is gold in US dollars on a weekly chart. You can see we're still in this big phase one wedge base. It's pointing to the downside. So there's every chance that this could be a break to the downside. The reason that I thought this might be the start of a new bull market was because we had a false break. We had a break of that quite well-defined lows. We got a false break, and then we move strongly to the upside. And it happens a lot of times at the end of a very, very lengthy bear market that the final capitulation ends up in a false break, and then the new bull market starts. So up until about 5 or 6 weeks ago, that looked to be a very strong possibility. But we're back down to the base again, and that's just not the sort of price action that I wanted to see. So the jury's still out on gold, and there's the daily chart. Now let's look at the HUI index. So this is the gold stock index. Now it's looking a lot more positive. You can see it's well off the lows. I drew this potential projected path, so a bit of a consolidation. I was hoping it would only consolidate to the 38.2. It consolidated back to the 50% retracement and then started to move away again. So there's still hope there in gold stocks. So there's this real divergence between those between gold and gold stocks themselves. Now, looking at the overall strategic approach, and this is really hasn't been any change in the last week. The US stock market remains the best place to be in the world. There's a couple of sectors in the US that offer the best value, the best growth in the world, and that's really the long and the short of it. Just be very, very careful about what you do in Australia. There's very, very little value here, so be very careful. Now, I've mentioned a couple of times over the last week or two that I'll be publishing some details on a global trading fund that I run. Those details will be out this week. I think you'll find that the results are excellent, and more detail on that during the week. For anyone who is not a member of Specialist Share Education that wants to know more about what we do, wants to have a bit of a communication with me about your trading or your investing, there's my email address. Look forward to communicating with you. I'll get back to you during the week with details on the fund, but for now, things, particularly in America, going pretty well. That's it for this week. Cheers.